All right, hello everybody. Welcome. This is Dr. Matthew Hicks. I'm the founder of Synaptic Institute. And today we're hosting a discussion with Justin Boutillier. I hope I'm saying that right. And
Botier, but that's okay.
Boutillier.
Botier.
Yeah, so thanks for being here. I do want to just let everyone know very quickly that we are having some technical issues with our Zoom subscription. So we're actually going to be limited to 40 minutes today instead of the full hour, if you had been planning on that. We are recording it, so you'll reference it later and share it with other people and enjoy it in that. But without too much further ado, I'm going to hand it over to Justin from Calix Accounting. And Justin, would you just introduce yourself briefly and then go ahead and
Yeah.
jump into your presentation. Thank you.
So my name is Justin Botier. I'm CEO of Calix CPA LLC here in Southern Oregon, Medford, Oregon. Our business, I've been 16 years self-employed tax accountant, and had a previous iteration of a general practice that I sold in 2016 for the purpose of getting into the cannabis industry more, as Southern Oregon is a pretty big hotbed for cannabis. So that really, I had been doing cannabis tax returns prior to recreational legalization here in Oregon, but I wasn't really doing them above board because everybody was very private about it, and that was fine with me. But once people started to friend request me on Facebook and people were standing in their marijuana gardens, I was like, okay, guys, I guess we're gonna have to start really delving into 280E because I can't get away with you guys being, being tomato farmers. So that kind of led into that process. I got educated on it real fast. And at that time, actually, it was still very conservative positions being held, and therefore very difficult for people to be able to stay in businesses like, say, a dispensary in which you're not allowed to deduct your overhead costs, which include payroll and facilities. So they're looking at 80 to 90% effective tax rates for 280E because of 280E. And so I went to a couple continuing education webinars, went to Denver, sat around with a bunch of people thinking I was going to get educated on what to do about it. And instead it turned into okay, well, what are we going to do about it as a group? Very much like we're doing right now. The accountants are getting together and we're what are we going to do about 280E for the psilocybin industry? Fortunately, we have a lot more history and a lot more precedence, a lot more strategy that we can now harness than we did back when we were just starting out in cannabis. And really the only, like I said, the methodology at the time that I started was a very conservative approach. But 471A was the methodology that we kind of landed on. This was pre-2018, so C corporation tax rates were at their 35% versus the 21% that they are now. The inventory, the simplification of the inventory calculation, 471C had not been in place. So we were doing a lot of allocating. We were allocating square footage based on manufacturing activities, and prorating overhead and doing these kind of tax acrobatics in order to be able to deduct expenses. I realize I'm already getting into the conversation. I don't know if I'm skipping ahead, Matt. I don't know. Should I just keep going, or because we got 40 minutes, should I just keep going?
Just keep going.
Yeah. And I know that you guys this is more about for facilitators, right? Versus service centers. And that's a little bit of a different animal. So maybe what I'll do is I'll continue down the string of thought that I'm on now and talk about tax strategies to mitigate 280E for psilocybin service centers. Fortunately, facilitators, I don't believe are going to have the same problem, because facilitators are not trafficking marijuana. They're simply there to provide safety for the clients of the service centers. That's how I understand it to be. And I haven't had anybody correct me, so I don't know if I'm wrong. I think I'm correct on that. So prior to 2018, we were using a methodology called 471A for the cannabis industry. And the 471 is an inventory methodology for manufacturing companies. Typically, it's like, how do you calculate inventory? And so we were using it for, of course, manufacturers, because that's a very simple application for that. But we're also using it for dispensaries, which are a little bit more similar to what a service center might be, because it's not manufacturing. And but because if we didn't do anything, these retailers would pay such a high absorbent amount of taxes, we went ahead and applied this manufacturing code to the retailer. And what we did was we encouraged them to do manufacturing related activities like processing and pre-rolls and weighing and packaging and all of that stuff. And so I'm going to try not to look at the chats as they pop up, just because I don't want to get distracted. So we were kind of putting a Band-Aid on that even then. Like, it wasn't technically a very good way to do it, but it was really the only method that we had. And fortunately, the IRS kind of landed on meeting us in the middle in terms of when there was an audit and the books and records were being well done and the allocations were being very well done. Then there was very little change or adjustment by the IRS in dispensary audits that used kind of this 471A methodology. Well, then 2018 rolled around and we got the Tax Cuts and Jobs Act, and 471A was then superseded by this one called 471C. Now, 471C is something that's been floated in the industry as a fallback to how we might be able to help service centers avoid the impact of 280E. However, in my opinion, it is a last resort, because it is a inventory calculation. And so it doesn't make a lot of sense to me to be like, well, we're going to allocate all this overhead in this payroll in this service center, and we're going to capitalize it to inventory. And I know these are like, I'm just talking very high level, and just because of time, I'm just rattling it all off. So I apologize if I'm leaving some people behind, but in order for us to take overhead costs, payroll and facility costs, using 471, we have to capitalize it to inventory. We have to say, like, we're going to value our inventory at this amount, taking into consideration this payroll and overhead, and we're going to capitalize it, and then we're going to deduct it in accordance with our sales. So that's kind of what the IRS is expecting to see when you use something like that. And with dispensaries, we can do that. But with service centers, I'm not sure if we will be able to. But the nice thing about 471C is the very simple code. In the code, it says you can calculate your inventory or take an inventory methodology that is in accordance with your books and records. So we can fall back on 471C. We can do that. And we can say, well, according to the code, we can deduct we can claim cost of goods sold based on our books and records, and all facility and all facilitator, all payroll and all facility costs are deductible. Now, what we're not going to get, and I wouldn't recommend we try to take this, is things like professional fees, insurances like liability insurance, property insurance, yes. Workman's comp, yes. But anything that has to do with facility and anything that has to do with payroll, we could potentially deduct that under 471C. And we have, and our firm has come up with a really nice way of presenting that to the IRS, even if it's to the chagrin of the IRS. Now, that's not, again, my preferred way of doing it. It's something that I've heard people floating. I, in fact, floated it myself when we didn't have another solution. But the solution that we're kind of landing on, and this was my original thinking, was to use the CHAMPS methodology. And I forget what CHAMP stands for, but it's like bringing medicine to people or something like that. I can't remember it. I apologize. And what that was, so CHAMPS is this tax court case that happened quite a while ago. I don't want to botch the details, so I'm not even going to try to present them in terms of like very specific dates. But it was a nonprofit organization that was very much invested in providing cannabis as medicine, and they provided therapeutic services along with selling cannabis to their clients. And they were a nonprofit 501c3. They were audited. The IRS immediately stripped the nonprofit status from that organization, and then it became a C corporation. And then they disallowed all of their overhead costs and all their payroll costs and all their overhead costs and left them with a huge tax bill, of course. So they appealed, and they fought it in tax court, and ultimately the IRS did rule in favor of the organization, the company, because a lot of its income was the services that this organization was providing. So because it had legitimately two sides of it, and a lot of the income was this provider income, like for these healthcare services, they were able to prorate their overhead and be able to deduct a lot of their overhead and a lot of their payroll because they were providing a service. And then the cannabis sales was actually a small part of that. And in that one case, it worked for cannabis retailers. So most cannabis retailers, that wouldn't work. They try to do it, but they don't get away with it because things like paraphernalia and merchandise and merch is a very small portion of their business, and everything is pretty much in the service of selling marijuana for that organization. But for you guys, it's going to be more, and I know we're not necessarily allowed to say things like therapy and therapeutic benefits and those kinds of things, but you guys are really doing kind of a therapeutic service. And I can't say that for all psilocybin service centers and whatnot. I think some of them may be in business for recreational purposes, and I can't speak to them, but I can speak to the people who are using this as a medicine. For people who are otherwise, they might be licensed in another healthcare as a healthcare practitioner in other ways, and then I know they're not using their license to do this work, but they're doing similar work. And so there's pre-sessions, and then there's the psilocybin session, there's the post-sessions, and all of that can be billed. The service center can bill that differently so that the actual sales of psilocybin, the psilocybin sales is much smaller. And therefore you can prorate the income from the psilocybin sales and the income from the services, and then you can apply that proportion to the payroll and the facility costs and the overhead costs and those kinds of things. And that is the way I would recommend doing it, at least out of the gate. And as time goes on, we have more practical application. We're going to learn a lot more, right? But we haven't done there has been no single actual case. So therefore, it's all going to be like kind of hearsay until we get to dive into it. But that is how so from the risk benefit analysis that you might do, I would say that methodology would be the one that is going to be the most defensible. And for service centers, I highly recommend a C corporation. And the reason why is because the federal tax rate it's still at 21%, not the 35% that it used to be. So that's not bad. So for high income people, sometimes the C corporation garners a better tax rate overall. But if there was an audit and you did go to appeals and the tax court ruled against you and then gave you $1 million tax bill or whatever, it stays at the tax level and doesn't get, and you and your personal assets and your personal income don't get garnished and liened. It stays at the C corporation level, and the IRS is actually not too bad to work with in order to take care of tax debts. My experience with the IRS is that they're more concerned about you getting into compliance and paying your taxes than them trying to punish you and for not paying your taxes and then put you out of business or something like that. That doesn't happen. What the worst case scenario is you end up having this tax debt on your business, and then worst case scenario, if you have to declare bankruptcy or do a restructuring, a bankruptcy restructuring, you can actually do that. So that's what I have for that part, and I have much more to say. Should we pause and look at these questions, Matt?
Yeah, so far we don't have any questions in the chat, but if anyone does have one based on what's been discussed yet, feel free to use the raise hand feature and pipe up or in the chat. Yeah,
it's pretty dense information. Like I said, I've been doing this stuff for a long time, and so it's a lot to learn. But one area that I thought would be really interesting to the people, or maybe also informational for the audience, I guess you could say, for those of you who are just getting into being a facilitator versus people who are operating a service center. Those are different, totally different things. The service centers are going to be the ones that are going to have the biggest challenges, but then the facilitators are going to be treated like either employees or ordinary business owners. And I have spent a lot of time coaching people who are just newly self-employed for themselves. And there's a whole little education process that one needs to look into in order to know how to best proceed and understand, what it means to be self-employed, what it means to get a 1099, how to set up the proper business structure to maximize tax benefits, and to understand what they're kind of getting into. Is that something, which direction should we go on this?
We just got a question in the chat. Dan is asking how we would structure our services to make a stronger pitch that they are healthcare and thus fall under CHAMPS.
Well, I think that there are some people who have already been kind of doing something similar with ketamine and cannabis, for example, where they're healthcare practitioners, and they use the medicine as for therapeutic purposes. That would probably be the best model to look at. I mean, any evidence that you can present then that's going to only reinforce your position. But the things that have been floating around that I've heard and speaks to me is this is something that is for the purposes of for medicinal purposes, are having sessions, having pre-sessions, a session with psilocybin, and then having post-sessions. I mean, you wouldn't have that if you were just doing something for recreational purposes, right? So that kind of method, and then of course each one of those can be billed differently. And then we would just be very good about keeping good bookkeeping and good records. And whereas, I mean, there are going to be kind of retreats, I imagine, where there's going to be probably multiple sessions going on at one time. But even if you were like operating kind of a spa or a retreat or a yoga retreat or any of that kind of thing, you can pretty much argue, like if it was a massage, for example, you would argue that there's medical benefits to that. And it's proven that there is, and it's proven that psychedelics have medical benefits. So as long as it's not looking like a place where you go in and there's like video games and I mean, I don't know, like, I mean, it can be kind of depending on what the purpose is. Is it are we trying to treat post-traumatic stress disorder? Are we trying to treat OCD? Are we what are we trying to relive our childhood? I don't know. I mean, it's kind of up to you guys to decide on how you're going to present the narrative that you are providing a therapeutic benefit. I see Gwen has her hand up.
Yes, hi. Thank you so much for your time. We really appreciate it. So I am currently training to be a facilitator and also playing with the idea of opening a service center. It's very overwhelming. But let's just pretend I'm just a facilitator. You said that because we're providing a service, it doesn't even go under 280E, which makes a lot of sense to me. How does that work? Am I an independent contractor? Are they?
Yeah. Well, let me talk about that, because that was something I was actually going to intend to start with. And that is, so first of all, like what I would recommend doing is, well, to answer your question, you are not trafficking by being a facilitator. You aren't giving from what I understand, the facilitator does not give the psilocybin to the patient, and they're not, and you certainly aren't selling it. So therefore, you aren't trafficking, and that's 280E. 280E is a penalty on trafficking. And I didn't want to go to the very beginning of what 280E is all about. Now it was implemented. You'll hear that over and over again. You can Google it. But what essentially 280E is it's a tax penalty on organizations that are trafficking, and you guys aren't trafficking. The service centers are trafficking. So for facilitators, you just have to be prepared to be self-employed if you're not going to be an employee. Now, if you could be an employee, that's great. If you are going to be doing, so there's different things that kind of make you an employee versus an independent contractor. Do you know what you're doing, or do you have to be told what to do by the employer? Do you make your own hours? Can you work for other organizations outside of just the one service center? Those kind of things make you more, you could be considered a independent contractor that way, versus an employee is like, hey, you work exclusively for me. You're just going to, you're going to work these hours, and then this, and oftentimes this is how you're going to do it. That is an employee. So for service center people too, you have to know what constitutes an employee and what constitutes an independent contractor. You have to put people on the payroll if you're going to tell them what to do, if you're teaching them how to do it, or you're setting their hours and they can only work for you. Again, you can have independent contractors, if they know that they're self-employed and they're doing this as kind of like on their own hours and choosing their own hours, and they know what they're doing. So those people can be considered independent contractors. Now, if you're an independent contractor, you're going to get what's called a 1099 at the end of the year, and the service center will issue that to you. So whatever the service center paid the facilitator, then you're going to get issued a 1099 for your services. And I know there's some other different things, like some people are talking about, like facilitators maybe renting space. And so therefore it's kind of like this mutual company where, like a joint venture almost, where a facilitator is bringing in the clients and then renting space, and then the client pays the facilitator or the service center for the psilocybin, but the facilitator is doing the work. Like she or he is doing the work. Now, that's a little bit different because now the facilitator is paying the service center. And either way, that facilitator with that structure would be considered self-employed. What I would recommend is registering with the Secretary of State and getting an LLC. That would be number one recommendation. Now, an LLC is a legal structure and not a tax entity, so you really need to be aware of that. When somebody says, I'm an LLC, that means nothing for tax purposes. In the past, LLCs used to be partnerships, but for like the last 20 or 30 years, LLCs can be taxed as sole proprietorships, S corporations, C corporations, or partnerships. It could be any one of those things. So you have to understand that just because you get an LLC doesn't mean you are taxed any one way. In fact, your default tax is what's called a sole proprietor. And that is, the IRS doesn't look at your business as being separate from you personally. And so your income and your expenses get reported on your personal tax return that way. And you're subject to an additional tax called what's called self-employment tax. So these are very important things. If you go out on your own, you need to recognize that as a sole proprietorship, you're going to be taxed. You're going to get an extra tax. It doesn't take much to accumulate a pretty big tax bill. Like, for example, you can make as little as $24,000 and say you're single with no children. You're going to pay about $6,000 in taxes for that money, because there's federal income tax, state income tax, and what's called self-employment tax. And what self-employment tax is it's payroll taxes. So when you're an employee, if you look at your paycheck, you'll see that there's Social Security taken out and Medicare taken out of your checks every time you get a check. Well, that's about 7.5%. And then your employer is also matching that self-employment or that Social Security and Medicare tax, and combined between you and your employer paying about 15.3%. So when you file a tax return as a Schedule C or a sole proprietor, then you get taxed on both sides of that. You're going to get the full 15.3%, which is your Social Security and Medicare. So you have to be prepared for paying higher taxes just as a legal business, let alone, a trafficking business as a sole proprietorship. So then once you start to make some money and you feel like, you can do this, there's what's also called an S corporation. And so I often don't keep people as a sole proprietorship long. What we do is we take your LLC and then we elect to be taxed as an S corporation. So you can be an S corp, or you could be an LLC being taxed as an S corporation. And there's some strategies around that so that you don't pay as much in taxes. But you have to be kind of in a good position to do that. It takes a little bit more education. There is, you're supposed to put yourself on the payroll and actually get a wage. It's a lot easier for individuals to be LLCs being taxed as S corporations versus multiple people being taxed as an S corporation. But depending, it can be navigated, but it has to be a good fit for you, and it's not a good fit for everybody. And then you can also be taxed as a C corp or a partnership, but I won't go into that because you as individuals, really, those are the only two options that make a lot of sense. You're either going to be a sole proprietorship or you're going to be taxed as an S corporation, and you'll start out as a sole proprietorship, and then with the help of a tax accountant that understands business, they could put you into an S corporation when the time is right for you. And they would be the best to know whether or not it will be good for you, and they can explain it to you. But those are like the there's 3 or 4 steps I would say right out of the gate you should do. You should get register with the Secretary of State as an LLC. It's very easy. You could do it online. Go get an EIN number, which you go on irs.gov, or you can Google apply for an EIN number online. Make sure you don't go anywhere other than irs.gov. Don't go to one of the third parties. They'll charge you. It's totally free to get an EIN number, and then go get a business bank account. Don't use your personal bank account. Don't commingle funds. the money that you receive from being a facilitator gets paid to your business, that goes into your business bank account, and then you in turn transfer money from your business account over to your personal account, so that you keep your business and your personal funds separate. And then you get a QuickBooks file and you start doing bookkeeping, or you use Excel spreadsheet and you keep track of your income and your expenses pretty closely. And those are all, that's the basics that I would say for you as a facilitator, also being self-employed. Those are the things you're going to need to do. Those are the steps you're going to want to take. And then you want to go see an accountant at the end of the year or just before the end of the year to see what would be good for you in terms of next steps.
Yeah, just I wanted to maybe just tease out a little nuance there, kind of going back to champs a little bit, and this sort of like multiple revenue type of business structure. And one of those things to point out, if I don't know if this applies to anyone here in the audience, but one is being real careful around dual licensure. I mean, so Measure 109 doesn't allow you to practice, as a psychotherapist and a facilitator, or any other, or I'm a naturopathic doctor. I can't do both at the same time. I could, however, theoretically do it through the same business, but it's just like one service at a time. And so that might be one way to do it. And you mentioned some other examples, if you're also a yoga studio or something like that. I believe that like those sort of things would qualify for being able to deduct your business expenses under kind of the 280E framework. Does that sound accurate?
Yeah, the champs, like the champs, using the champs model, and yeah, even a yoga studio. I think if even, and then there was something in the chat about spiritual, and for a long time there has been organizations that have claimed to be churches, and those don't even file tax returns. So there are churches, but I don't know if you can get licensed as a church. But anything else, it's going to be the C Corp. And Heidi asked about if you're an LLC. I would say almost 100% of the time, file as an LLC with the Secretary of State, and then you can elect to be taxed as any taxed entity. The defaults are partnerships, and as if you have more than one person. If you're one person, then your default is a sole proprietorship. But you don't want to know. Partnerships can be useful in certain circumstances. They're very flexible, but I wouldn't hang there too long if I were you. I would, if you're a service center, I would definitely go for the C corporation for the reasons that I said before and for a few others. But as far as like, I don't know what's gonna fly with the IRS in terms of like, well, is yoga, is meditation, is like relaxation, what will fly as being a medical service or being a service? Yeah, so definitely like yoga, for example. Yeah, if you're teaching yoga classes before and after the psilocybin, and you have hired a professional yoga instructor to do yoga, even while, I don't know if you're allowed to do that. I don't know what the limits are in terms of what the environment is supposed to be while people are under the influence of psilocybin. I certainly hope that it's flexible enough to be able to like walk in the garden or do yoga or whatever, but I don't know if they want to just keep you boxed in a room or not. But I would say that, yeah, absolutely. So those, like you were saying, Matthew, I'm sorry for beating around the bush. Yeah. You're not allowed to use multiple licenses, but certainly like yoga wouldn't qualify as that because you don't have to be licensed for that. And therefore, if you've hired a professional yoga instructor and all of the expenses surrounding facilitating that yoga instructor to do their job, to me is deductible. That's deductible to me.
And now, to kind of just bring it back to like the tax portion of it too, is like my understanding is that it doesn't necessarily have to be like in the same category of like healthcare, right? It's like if I
No,
were
it doesn't.
if I were
Actually, it
selling
does
like
not have to
coffee
be.
or something out of my
No.
service center,
Mhm.
here's, you know, Portland roasted coffee or something like that
Yeah.
would be a totally separate, you know, business expense where you could.
Yeah, you have to be, I mean, you have to be careful because first of all, and I say this all the time now, is there is no risk-free way to do this.
Mhm.
But not taking an approach is not going to be an option, like from a business perspective. Like you will not make money and you will get mired in tax debt very, very quickly and it won't make sense. So you do have to take some sort of approach, but the tax court has definitely argued that any kind of illicit activity in a business environment could it could cause the whole operation to be a no-go. You know, like there's another word I'm looking for, but I couldn't find it. It will make the whole. They could argue that, but they haven't. If given a good argument, you know, they don't typically do that unless the organization doesn't have any legs to stand on. So you have to be careful in that what you're doing cannot be necessarily in the service of psilocybin. Like if the whole purpose of everybody coming to your service center is for the psilocybin, for psilocybin purposes, that's not going to work, right? So having psilocybin sold and then entertainment that's built around the psilocybin experience, that's not going to work. So like a coffee shop, for example, I wouldn't go that direction.
Mm-hmm.
Certainly have a coffee shop, but people aren't there for the coffee, you know.
So Justin,
but they might be there for yoga and they might be there for the combo of the psilocybin yoga experience, but they're not there for the coffee psilocybin experience.
Right. So Justin, I wonder if just real quick, you could let people know how would they find you if they wanted to engage you in more advising or your services.
Yeah, I'm going to be in Portland on the 19th and 20th at this little convention called the Psychedelic Convention in Portland. I think it's like their first year putting it on, but I'll be speaking at that. And then, it's Calyx, CALYX, CPA.com. And then if you talk to several people who are on this call, they know who we are. We're definitely a pretty well-known cannabis firm in Oregon. And we do, 280E mitigation for mostly dispensaries across the United States. And I can always just put information in here in the chat. calyxcpa.com if you want to check us out that way.
All right. Well, thank you so much, everybody, for being here today. And sorry we're short on time. Synaptic is preparing for